Why insurance industry regulatory compliance is no longer a choice. Mastering the new standard for insurance industry regulatory compliance. The landscape of the insurance sector is undergoing a seismic shift. As we navigate through 2026, the complexity of insurance industry regulatory compliance has reached an all-time high. Carriers are no longer just battling traditional risks like market volatility or catastrophic weather events. They are now facing a sophisticated localization of rules where national regulators are rewriting playbooks to prioritize consumer protection, AI governance, and operational resilience. For many firms, the old way of managing compliance, relying on manual checklists and fragmented PDF processes, is failing. The gap between identifying a customer's intent and actually completing a regulated transaction is where most compliance risks live. Every incomplete or not in good order FNOL is not just a compliance issue, it is a direct cost driver, extending claim cycle times, increasing manual rework, inflating loss adjustment expenses, and compounding regulatory exposure with every customer callback. At scale, failure to complete regulated journeys deterministically becomes a structural tax on claims operations and customer trust. This is why forward-thinking insurers are moving toward a deterministic model of execution that doesn't just talk to customers, but ensures every step of a journey is legally sound and fully documented. The evolution of regulatory pressure in 2026. Insights from the Deloitte 2026 Global Insurance Outlook confirm that insurers are entering an era of considerable uncertainty. Regulators like the FCA and NAIC are increasingly focused on consumer duty and good outcomes, meaning it's not enough to have a policy in place. You must prove that the customer's journey was designed to be transparent and fair. The shift toward agentic AI has introduced a new layer of risk. While AI can handle high volumes of inquiries, it is prone to hallucinations or skipping critical disclosure steps if not properly governed. The real risk with agentic AI is not visible hallucinations, it is silent non-completion, where required disclosures, validations, or evidence checks are skipped without detection. In regulated insurance workflows, an interaction that feels successful but fails to complete correctly is a hidden compliance failure. To bridge this gap, enterprises are adopting dedicated technology layers that enforce business rules at the point of execution. CalVU, the completion and compliance layer. One of the most significant breakthroughs in modernizing insurance industry regulatory compliance is the emergence of the CalVU completion and compliance layer. Traditionally, there has been a massive automation gap in insurance. A customer might start a claim via a chatbot or a voice IVR, but the process often breaks when it comes to high-stakes requirements like identity verification, e-signatures, or document uploads. As we explored in our previous deep dive, why FNOL insurance is about completion, evidence, and compliance, the first notice of loss is the most critical moment to capture accurate, compliant data. CalVU solves this by acting as an execution governor that sits between the customer interaction and the back-end systems of record. Orchestration platforms can route work, and AI agents can converse with customers, but neither guarantees that a regulated transaction actually reaches a legally valid, auditable state. CalVU exists to own the moment of completion, where intent becomes a binding, compliant outcome. How the completion layer works: UI completion mode. This utilizes mobile-first micro-apps that guide users through a structured workflow. These apps make it structurally impossible to skip a mandatory disclosure or miss a required signature. Back-end deterministic completion. For workflows initiated by AI agents, this layer ensures the process is executed programmatically with 100% validation. It removes the guesswork from AI, ensuring that every transaction reaches a validated, auditable finish. By embedding compliance directly into the digital journey, insurers can eliminate not in good order CAD-NIGO errors, the silent killers of operational efficiency. Why audit ready is the new baseline. In the current environment, a single snapshot of compliance isn't enough for auditors. They are looking for traceable ownership, immutable timestamps, and consistent proof that policies are being followed in real time. This means producing concrete compliance artifacts, completion certificates, immutable decision traces, evidence packets, and time-stamped execution logs that auditors can inspect without manual reconstruction. Modern successful companies are those that build evidence capture into their everyday workflows. Instead of scrambling for documentation during an audit, these firms use systems that automatically log every configuration change, user update, and security test, achieving seamless compliance through digital transformation. The ultimate goal for any carrier in 2026 is to turn insurance industry regulatory compliance from a bottleneck into a competitive advantage. When your compliance is by design, you can bring new products to market faster and offer a frictionless customer experience that doesn't sacrifice security. Using a platform like CallView allows insurers to settle claims faster by automating the first notice of loss (FNOL) process with integrated evidence collection. Reduce rework, ensuring all data is validated at the point of entry so agents don't have to call customers back for missing information. Guarantee auditability, maintaining a persistent state across all channels so every customer interaction is logged and compliant, regardless of whether it started on a phone call or a mobile app. The path forward. The move fast and break things era of digital transformation is over for the insurance sector. Today, the mantra is move fast and complete things correctly. By investing in a dedicated completion and compliance layer, you aren't just checking a box for the regulators, you are building a foundation of trust with your customers. Effective insurance industry regulatory compliance isn't just about avoiding fines, it's about delivering the ironclad reliability that modern policyholders demand.